Hello, I'm Rhonda Porter. Thank you for joining me for this week's episode of the Mortgage Porter for the week of January 19th, 2026. We have a short week with the Martin Luther King Jr. holiday yesterday. Markets are reacting to a lot of the news that happened over the weekend, including Trump's new threats to use tariffs against European countries that don't support his views on acquiring Greenland. This threat is unfortunate, and unfortunately, it's impacting mortgage rates and the markets today. Optimal Blue reports the average rate for a 30-year fixed as of last Friday, January 16th, to average 6.043%. This is very, very slightly higher than what I shared with you on last week's rates. And remember that we can't lock in rates from Friday. I wish we could. And Optimal Blue index is based off an average from about 35% of mortgage transactions, which are lenders who use Optimal Blue when they go into lock in an interest rate. And so we don't know how these rates are being locked, if they're being priced with a point or what somebody's credit scores are or what the loan to value is with the transaction. So it is just an average. And this is just intended to show you how rates have been trending. And if you would like to have current rates based off of your personal financial scenario, please reach out to me. I'm happy to provide that for you. Well, on the economic calendar, today we had the ADP weekly report, which came in with some weak job data. Thursday, we have gross domestic product and PCE, both measure inflation and can impact mortgage rates or mortgage-backed securities. And odds are currently very low, around 5%, that we'll see the Fed make changes to the Fed funds rate on January 28th. It's just after 11 a.m. Seattle time as I prepare this for you, and mortgage-backed securities are down 28 basis points, and the Dow is down 847. Have you been thinking about remodeling your existing home? Here's a brief overview of some of the different programs that you could look at for doing a home renovation project. So for starters, the easiest one is probably a HELOC or home equity line of credit. And that is typically a second mortgage that would allow you to keep your existing first mortgage. The loan amount would be limited to the combined loan to value of your home as your home currently is. So you cannot get a loan based off what the future value of the home would be after the improvements. The traditional cash out refi would also be the same. It's going to rely on the current value of your home. And it typically will allow you to go up to 80% of the current value for the new loan amount. And then, of course, you're going to deduct the payoff and closing cost for the transaction. And then the remaining funds would be what you would have available for your home improvements for that scenario. And so these options work good for smaller projects, typically, depending on how much equity you have. And they also allow you with the most flexibility or control over the renovation project. A conventional renovation mortgage or an FHA 203K loan will allow you to borrow based off of the after improved value of your home. So if you're looking at a much larger project, this might be something that you want to consider, something like adding an ADU or something like that. And with the renovation mortgage, there are more requirements with the lender as far as contractors and bids, and you're not going to receive the entire lump sum at closing as you would with a cash out refi or a HELOC. So it's good to compare options so you can make an informed decision on what's going to be the best route for you with your home remodel plans. And just a reminder, our next homebuyer workshop will be tomorrow, Wednesday, January 21st from noon to 1. And we're going to be reviewing different mortgage programs that are available for homebuyers with a focus on first-time homebuyers, as well as different strategies to help create affordability. So you do need to register at mortgageporter.com and click on the classes workshops tab on the top of my page. And this is in a webinar format, so you don't have to worry about being on camera. You can enjoy lunch while watching the workshop. So, and also, of course, my previously recorded workshops are being released so that you can watch those at your leisure too. Thank you for watching, liking, and sharing my videos. I truly appreciate your support. And if you know anyone who's thinking about buying, refinancing, remodeling, or even a reverse mortgage, let's talk. I'm happy to help you or anyone that you know, and I hope you have a great week. And let's go Seahawks!